I will just directly go to investments, not necessarily business, because there is a difference which most of the time we confuse. What we do actively, and especially as an entrepreneur, is doing business, is being an entrepreneur, and all those others. What we do passively is what I may call investments, where not your head, not your heart are working for you, but your money now starts working for you. That is passive. Business is in many forms. And I'm here, and I'm sure here in this hall, we are homogeneous. We are heterogeneous. We have come from various backgrounds. We are not the same. Our reasoning is not the same. Businesses are actually always like that also. Because if you all think about the same thing, we'll all be owning banks like the chairman, or all be owning companies that are more or less the same. But the reason why, or the fact that there are as many people as diversity can give, it is the same reason that there are as many businesses and for as many reasons as there can be. And we always say in the economic class that it is not out of the benevolence of the baker that we enjoy our breakfast, having our bread. It is not out of the benevolence, it is also not out of the benevolence of the butcher that we enjoy our nyama choma or meat in our homes. It is out of their self-interest to make money that we But DJ, ongeza sauti kidogo tafadhali. Asante sana. I was saying that it is, let me repeat that, because it's the only thing I want to say about business. We go to the investment, the reason why I was invited. It is not out of the benevolence of the baker that we enjoy our breakfast, and especially the bread we take. It is also not out of the benevolence of the butcher that we enjoy nyama choma or our meat. But it is out of their self-interest to make money that we enjoy the two. And that is how the economy is made. Economy is made out of selfishness. Out of personal pursuits, then harmony is gotten. The fact that when you are working in an office in Nairobi, you don't have to worry how you'll go home. You know there'll be a matatu waiting for you. It is out of the matatu owner, their interest to make money, that harmony is gotten for you to get a matatu when you need it. And the same way, when you are going to your local kiosk or a supermarket, that you get the actually they are waiting for you. They are not there to harmonize your life. They are also there to make money. And that is how the economy is made. So whatever personal pursuit we pursue, it's not bad and it's not wrong. And I say so because majority of us who are from the village and also who are Christians, sometimes we may think that looking for money is entirely a bad thing. I don't believe so. Because we make money out of doing good, and it is out of doing good that we grow our economy, and then everybody benefits, because it is self-feeding, and it's a revolving door, and that is how it works. Now, I met Jimmy this last week, and we were debating. I was actually going to look for a guest to come and be on my behalf, because there were other programs, and I also actually have a graduation tomorrow at KU for Masters of Economics. But when we met, and we met with some of the friends who have come from the UK, I decided that those other things can wait. I needed to be here today. and especially to share, and I think it is this table. We were with them last week when we were aligning the program. The reason why I decided to come is it is because I realized there is a lot of information gap. Kuna gap kubwa sana ya what we ought to know and what we actually know, including myself. I'm not purporting to be the person who possesses that information, but I came to realize that the investment opportunities and options that there are, if you all exhaust the information that we have, then we can actually even graduate further to other higher investments. What do I mean? When we were talking with the friends from the UK, I came to realize that, yes, you are investing, and I don't want to say that what you are investing in is suboptimal, but I think information can make us invest in other better areas. Because a normal person, especially abroad, and even us who are here in Kenya, we all belong to circles. And circles are okay, they are fine. We are all chasing after land, plots of land that Chairman Moga was talking about. We are all buying treasury boats and bills. We are all, when it comes something like MMF, anything that becomes a fund, we all get in there and we are investing in them. And I keep asking myself, and that is the question I want to throw to all of us, is where you are putting your money the most optimal area that your money can work for you? Do you know everything that you actually need to know so that you invest your money in the most optimal manner? Optimal manner meaning the highest return that is possible given the circumstances that are there. So I want us to reason together, because we are talking to each other here. Where is our money? Our money, number one, definitely is in the bank, one, either in terms of savings account or even a current account. Your other money is fixed in a bank. Fixing meaning it is part of the things we talk about, and I'll be very brief. Definitely now in this hall, our money is in plots. Plots, many of them, and I'm not saying they are bad, but I'm saying your money is there. Whether it is bad or not, it is your decision to make. As we conclude, we will have seen whether you need to keep on putting that money there, or you need to have many more other areas to put the money. Where is the other money? Treasury bills and boats. And where is the other money? SACCOs. SACCOs in terms of buying shares, and SACCOs in terms of savings, deposits. Now, where do you actually invest? All of us here, including me here, we have plots. Where do we buy plots? Okay, you have bought a plot, you already have your home. The third plot you are buying is for what? Most of the time, to build a rental. Then the other one, to actually know you are wealthy, because you are not yet wealthy until you have a file full of title deeds. And why do we actually do that, Chairman? It is because when I was growing up in Gadukene, I was told, for you to be a real man, Washiro, you need to have a lot of land. So we came to Nairobi knowing, Mudhurine, higher. The last 10 years ago, or even 15 or thereabout, it was actually true in terms of even the return. You could buy a plot anywhere in this Nairobi. Within 3 years, you are talking about multiples. Is that the case today now? Don't give me answers. I want you, those who are taking notes, to refer it. I want you to go do that for yourself. When you buy a plot of land today, how much does it appreciate and within what time? And we used to be told, you know, shamba haiozi, so haipotezi. And I'm not talking about a house, I'm talking about land. We are being told, you know, land never loses. Are we actually sure land never loses? The plot you bought last year, try to sell it today for the same price you bought it. Then we come here in another baraza and we talk. Those are things I'm not trying to kuigiria biashara. I'm just trying to provoke our minds. Our brothers and sisters in real estate have done an incredible job in this country. On what? They have made sure that there is perpetual supply of land for people to build their homes. If you remove our brothers and sisters in real estate here today, land in Nairobi or in the environs would be unachievable for all of us. But they came and enlarged Nairobi. So Nairobi used to be here. So Nairobi went further. Nairobi went actually further and further. Even Juja Farm is now Nairobi. It is because of them and their hard work that they have kept the supply of the plot we need to build our homes still there. But after you buy that Juja Farm plot for you to build your home, why are you buying the fourth plot in the same area? What is it for? It can only be for capital gains in terms of it goes up, or you are leasing it, that land, or you are building to start becoming an income earner, or just for sentimental value that I have land, which is now 7 plots, 2 in Juja Farm, 1 in Roiro, and the other one in Kikuyu, and Gong also I have in Kitekera. Now after that, and even me, I have that experience. I'm not trying to say that I'm very good. After that, then you have all those plots. Now, shida inaanza hapo. Remember, you already have your home and 6 more plots. The other plots you are told, kuna mtu anamwaga mawe hapa kwa plot yako. Ukikaka tena unasikia, hapa kuna mtu anajenga fence, hatujui kama ana fence kwako ama kwake. Na saa hiyo uko UK ukifanya kazi. Ama uko America. So, what do you do as the mitigation? Then you have to have people now to start looking after your own assets. And then you have a cost attached to it. And then, not just one because they are sparsed. You have one in Roiro, kuna mtu anakuangalianga, anaiangalia. Hata kama sio kiateka ni neighbor, once in a while you have to do something for that service to continue coming through the way it's coming. I have always wondered, how comes in the places you live in the US and the UK, how comes after people buy their homes, they no longer have 6, 7, 10 plots? Why? Why is that? I see my brother looking at me, so let me watch and niache maneno ya mashamba hapo. Fixed income. Fixed income asset is what? Fixing money in the bank, T-bills, T-boards, treasury boards, anything that you are guaranteed money. When you are guaranteed money, and it's me guaranteeing you that money, what comes to your mind? That I'm already guaranteeing you, I'll give you 10%, 12%. So you think I came all the way from Turkana? You think I came all the way from Nyeri to come to Nairobi to guarantee people returns? I'm not talking about me. I'm talking about that company you've put your money. So you think that guy set up an investment bank to guarantee you money? I think that person made that bank to guarantee themselves money, not you. So I want us to I am provoking your mind. I'm not saying anything is wrong, as I said. I want you to open your mind to other things. And the last thing I want us to talk about is what Chairman Moga talked about. Because that is what I have experience in, and that is what you share what you have. When you call a real estate person here, they will say other things that I didn't know quite well about real estate. So me, I came here because the domain I know most is the capital markets. Other people call it securities market or stock market. That is my domain. So if I talk more about it, it's because I was invited to say about what I know, not what I don't know. And what I know is shares. And I am glad that Chairman Munga left it where he left it. Chairman, I have given examples with you many forums. And I have been giving these examples because I know I am your son. Na nikikosea kidogo nitasema pole na tuendelee. And I'll give that example as you sit here because we are all learning. Chairman Moga started Equity Bank. And he's here. Bill Gates started Microsoft. He's not here, but we know him. Chairman Moga now is actually not the largest shareholder of Equity Bank. Many of us know he's the owner. He is the founder, just like Bill Gates. But Chairman Moga actually has less than what is in his name. Less than actually 1% of Equity Bank. But what do you think is 1% of Equity Bank? James Mwangi, the CEO, I can say maybe if you include possibly ESOP, what is in the books is around 3-point-something percent, 4%. But because there is also staff ownership, maybe it could be up to 5%, which is allowed by central bank. But what is 5% of Equity Bank? This year, Equity Bank will be the most profitable bank in Kenya. Many times we've been comparing Equity Bank and KCB. This is the last year we are comparing those two banks. And I'm talking about that as a person who does investments. This is actually the last year. We are comparing Equity and KCB. From next year, we'll be talking about Equity and then KCB. And I'm talking about profitability. Profitability, versatility, etc. But that's not the point I am trying to drive home. This is the person who started a company, had the option of owning it 100%, but decided if I own it 100% and I have my branch in Kahatia in Kagema, yes, I'll be 100% owner, but of what? He decided now, for me to be actually wealthy, I can't be wealthy alone. I can only be wealthy alongside other people. So he brought down the gates of Equity Bank and called the people in the village, invest in it. Some took it and invested. Others like us cut the bus when it was already listed in the NSC. But what did that do? The idea of Chairman Peter Moga, who is seated here, made many people millionaires and some billionaires. But in the process, his capital and his money also multiplied more for himself. So he ended up owning 1% of an ocean instead of 100% of a fish pot. Some of the points he gave, I have seen them with my own eyes. I started doing stockbroking when I was in first year in campus, employed by Kenya Karaoke as a stockbroker then. And some wazee would come, mzee anakuja, ametoka Muranga. And I'm saying Muranga because most of those old investors were actually from the same locality. So mzee would come with a kabahasha. They have come to do what? To sell some shares to pay school fees for their children. You are seated there, employed by a stockbroker. Mzee would come with a certificate without knowing the shares he's presenting before you, let's say, had 10,000 shares, were already split and already bonused, and Mzee seated there, who took a matatu from Kagema or from Muranga, was actually able to buy a Range Rover, but they didn't know. If you ask any person who was in any stockbroking company that time, Equity Bank, Co-op Bank, those two especially, mzee alikuwa anakuja, you know that time there was no CDSC, shares were certificates. So mzee alikuja na certificate, hata hakupata habari share ilisplitiwa mara 10 na ingine mara 3 na 3. So hii share moja ni kama share 100. Yeye tu anakuja na 10,000 shares without knowing he's actually a millionaire who, instead of going back with a matatu, he had the ability to go to DT Dobi, buy a Mercedes and drive back home in Kagema. And those are real things I have seen. So I have talked many points in that. And I'm just trying to say the reason why I am myself inclined towards stock market and shares is because I think it is the most less complex. Why? We are talking about, let's say, company called CIC Insurance. It's also listed. Suppose they have 100 shares. You have 1 share. And you are 100 of you. It means 100 of you are what we could call business partners. You are 100 business partners. So shareholding also becomes like a business partner. You become like this table, you have a company. The company is the name of this table. So in this table, you say we contribute money to start this company. It needs 100,000 and you are 10. So kila mtu atoe 10,000. So that 10,000 earns you 1 share. That is how the stock market works. So you are already a part owner of that company. And companies do that so that they get money to grow, and that growth is multiplied. That growth is escalated much further, so that what you can achieve by your money, let me paraphrase, what your money can achieve collectively becomes much more for you as an individual than what your own money can achieve for you when invested by you as an individual. So take Dama, who is here. Dama has mobile spares. So Dama realizes I'm making 1 million shillings as profit every month. So per year realizes this is 12 million shillings. So Dama realizes now, why am I actually selling spare parts? Why do people know me as a spare parts person? Why can't I be selling now phones manufactured by me, actually called Dama mobile phones, instead of Apple? And instead of Samsung, you can have T-Mobile, Dama mobile. So she realizes she has competences in the market of phones. That is the competitive advantage she has in the market of phones. But realizes also, I am comfortable. I am Dama. Everyone knows me. And I'm making good money. $1 million per month for me is good. I can drive my V8. I can live where I want in Nairobi. What more do I want? Mi sitaki kusupuliwa. That is a good option. But then realizes, I think I can capitalize more with what I already know by doing it with more people. So Dama realizes, I'll go to China learn some technology. I will go now to Roiro, the same place maybe I started, or go to Nakuru or elsewhere. I'll start now manufacturing my own phones. Then she does her computations and realizes it's possible. Now Dama now launches T-Mobile. But now she needs money to invest in the business to grow. She can either go to the bank, take a loan, or offload some of the assets she already has. Maybe she has already done that, trying to prop up the business. Now, instead of all that, there is another option. You realize, instead of doing this thing alone, I am one Dama here, so I'll get somebody to give me 100 million shillings. And these 100 million shillings, I'll actually give them 20% of my new business together with the old one, so that they have comfort of already secure cash flows. So Dama now ceases to be 100% owner of Dama mobile spares. She becomes an 80% owner. But she sold 20% for 100 million, some of the money which is being used to set up a factory to manufacture phones. So by virtue you have raised 100 million shillings for 20% stake, immediately your company becomes valued at 1 billion shillings. 500 million, sorry. If 20% is 100 million, yes, it becomes valued at 500 million. She grows the business, now she's already producing phones. She realizes now, beyond Kenya, I can sell my phones to Uganda and Tanzania. But then you need more capital. Now to grow the company even on steroids. Because the market is there, everything is working for you, except capital to expand. The same Dama now calls the other 20% shareholder, tells him or her, let's open up this business for more people. Now you actually fundraise from 10 people. Each 50 million shillings. But that 50 million shillings maybe gives you 5% stake or 2%, whatever. But let's even talk about one person for simplicity of this math. The business is already 500 million according to the last valuation. And fundraising, they are called fundraisings. You get now another person, let's talk about one, but they could be many who put their money in one basket. They come and because you are really expanding and they can see money is flowing, you tell them now, we need 200 million shillings and we'll give you 10% of the business. Immediately you fundraise 200 million shillings for 10% of the business, automatically your business becomes valued at 2 billion Kenya shillings. What am I trying to say? The people you hear about, billionaires in the entire world, the richest now is Elon Musk. He got revalued this week because of a company he has called SpaceX, which will be listing in America next year. It's an unlisted company already valued at $800 billion US dollars. He has 42% of it. So his entire net worth is now over 650 billion US dollars as of this week. 650 billion US dollars. But has Elon Musk ever touched 10 billion shillings combined as Farifari? No. How is he a billionaire? He has a 12% stake in Tesla. So Tesla started by doing what I have said Dama would do. And after the company became so big, now it's $2 billion Dama company, Dama goes to NSE and actually lists. So she gets $1 billion shillings to invest and escalate the company even further. And now from there, Dama is now a billionaire, almost a dollar billionaire, and going through that route. Elon Musk, Microsoft, Peter Moga, James Mwangi, all of those, they are not billionaires because Chairman Moga has $1 billion shillings in their account, but it's out of the valuations of their companies. So that is I have given a business talk there, but also summarized also the investment part. That is the reason why, for me, I have a preference for stocks. Why? I'm investing in something with life. When I invest in a plot, let's say even a flat, I've already built a flat, let's say. A flat cannot add 2 more floors. At near the America, it requires 4 floors. Ati, irakora tamote, gakora ya gorofa idadatu. It can't work like that. If it is 4 floors, it is 4 floors. You can only come and physically build the extra 2-3 floors. The only thing that can change is the rent. But the plot cannot grow. But when I invest in Equity Bank, I actually have shares in Equity Bank also. Because I think it's a very, very good business model. So when I get into equity, when it is Equity Kenya, and you buy 10 shares of equity, or 1 million shares of equity. So those million shares of equity, when it is in Kenya, now the board sits down, goes to DRC, buys a bank there. When they buy a bank, what is that doing to me? My share that I have 1 share in equity here in Kenya, ndio imetumwa DRC kuniwidia pesa. When equity goes to DRC, there are no separate shareholders at DRC na wa Kenya. When you are an investor in Equity Bank Group, ikienda DRC, the profit made there, you also see it in your 1 share. Now, the company now departs from there, it is already doing well, goes to Tanzania, goes to Uganda, and now I saw even better news, going to Ethiopia. When you go there and invest there as Equity Bank, mimi na kasia yangu hapa Kenya ndio iko huko. So what do I mean? Investing in a company has life. It has life because the company is versatile. There is decision making that is making the company grow. But when I buy a treasury bond, other than the biannual payments that I'll be paid by the central bank, my 1 million after 10 years will still be 1 million. Remember in the company, and I'm using equity because the chairman is here, you buy this share here, it is already going to hunt for you money. But remember, out of that hunting, it is also growing as an entity. So, and as it grows, in the end of the year, they pay me part of the money, the profit they make in terms of dividends, and we retain some, kuenda kuwida even more. That is why for me, I always prefer the stock market. Either you as the owner of a business listing and ceasing to be 100% owner, but also many of us as passive investors also investing in companies that has got life, other than assets that are just static and stale. Most of the fixed income assets are static and stale. Because once you invest in it, no growth, you are assured yes, after every 6 months you are given your interest, but your money remains your money. But the person you've given this money is already investing it in growing, in entities that have life and growing. As I come to the conclusion, what do you look for? Because I said my area is NSC. Nairobi Securities Exchange, you go to any licensed broker. You can just go to CMA website, you get a broker, open a CDSE account. So that by the time you go back to America or the UK, you already have that account. Secondly, carry their bank account, because you'll be sending money directly from your bank account to the broker's account, and after that, you give what is called instructions. Instructions is like, buy me CIC shares, buy me Kenya Power shares. You write them an email or in whichever other module that is acceptable and that can be archived. Then they buy for you, no complication. Liquidity. If I have lot and I want to liquidate, if I have a T-bill, I want to cash in. If I have shares, I want my money. When you have your shares, Kenya operates on something called T+2. T+2 means trading day plus 2 days. When you sell your shares, you get your money after 2 days in your bank account. Now, what do you look for? Because that's a question I am sure majority want to know as I come to the conclusion. Umesema hiyo yote, nitajua hata nitanunua gani? Hata mimi sijui ni wewe utajua. But I can give you some guidelines based on the retro experience I have. In the stock market, you start with the, first of all, angalia tu global markets ziko namna gani. Because Kenya does not operate in isolation. Kenya operates as part of the globe. So ukiona, when the interest rates globally are going down, you see Federal Reserve, they met last week, the rates are down. When the CBR, central bank meets, they take the rate down. That is already a signal that the entire globe is going a low interest rate regime or time. Most of the time when the interest rates are going down, the stock market is going up. Because a person with money then decides, instead of buying T-bills, which are giving me so retro, so capital starts moving to the stock market, like it's happening now. After globe, which you tick that box, come to the country. In the country, how is it in terms of not just purely the economy, the stock market itself, and comparative with the interest rates? Because capital always chooses between interest rate and shares. That's how markets always operate. So, when interest rates are going down, you can be sure shares will, in the meantime, continue also going up. So you tick that box. The other one you go is sector. Yes, you are now in Kenya and you are investing in Kenya. Or in the US and you've decided through New York Stock Exchange or NASDAQ, you are investing in the US. Now, go to the sectors. Within that country, let's say it's Kenya or the US, which are sectors that are showing the highest growth. Let's say, for example, in Kenya, according to myself, it is actually banking sector and possibly IT. So when I go to banking, I have zeroed in, let's say, in the banking sector. When you zero in into the banking sector, you realize there are many banks that are listed. There is ABSA, Kenya. There is Stanchart, Kenya. There is Equity, there is DTP, there is KCP, there is HF, which also chairman is part of. Chairman, even HF is actually also there. Through Britam, which is also there. Is huyu chairman anasema is not wealthy. Huyu, he is among the single largest individual shareholders of Britam. So, what am I trying to say? You zero in into the sector. If it is insurance, you check Kenya Re, Britam, Sanlam, Jubilee. Go, how profitable are they? Not just now, over a period of time. It's not something that will take you a month. One afternoon is enough. So don't get terrified by these jargons that you are now going to employ a professor to teach you. No. With your phone and data, there is no information I'm giving that is not publicly available. So you go to the banks. Look at number one. Those who will invest in banks, go into their financial statements or just Google, AI will give you. Get something called core capital. When you get something called core capital, look at also how much is it trading. It's called market capitalization. That if you bought all the shares of that bank, how much would it cost you? Now, something intriguing you are going to get. That in Kenya, most of the banks are actually trading at a discount. What do I mean? Core capital ni pesa kama munaanza bank, munaweza chaga muanze. Let's say you need 10 million to start a bank. Of course, the requirements are higher. I'm just giving it for example. You need 1 million each to start a bank. So that core capital is now the 10 million. Majority of the banks, including Equity, is not trading at that 1 million, 10 million. It is trading at like 70% of that. So there you see an opportunity. Why? Because you're already buying this bank at a cheaper price than if a person is starting a bank in Kenya today. It's called either discount or a premium. So after that, look at the profitability. Profitability, look at how it has been profitable. The last thing you look at is something called PE ratio. You look at earnings. You divide all the profit, and then you divide by the number of shares, so that you check, hii share yangu moja, it made how much profit last year. Then, PE measures, if I am to rely on the earnings to recover my money, and if the company is to pay all the money they make in profits as dividends, how long would it take me to recover all my money? That's what PE ratio is. Very lastly, Chairman told you about equity. I'll also tell you a story I told my sisters and brothers who we had a chat. Kenya Power shares, when I saw the opportunity there, I started buying kidogo kidogo. We are not talking about decades ago. Last year, around August, that share was still trading at 1 shilling 70 cents, 1 shilling 80 cents. And I used to tell everyone I could meet, including Jimmy, who actually also bought. Nunua hii share. In fact, there are people I used to tell, ukienda hasara nitakurudishia. Lakini nyinyi siwaambii hivyo. Mtu atajisort pole pole. So because I could see an opportunity. So 1.7, 1.8. As of today, the share was around 13 shillings. Look at it this way also now. That's the reason I have talked about Kenya Power. Last year, they made a profit of 24 billion. 1 year net profit. Net, real money. You know, there are companies that make profit out of revaluing a building, revaluing a car. Not revaluations. Real trading money. They made 24 billion in net profit. The company, the entire world today, is 24 billion. So you want to tell me, a flat you are collecting rent for 10 million shillings in a year, and today it is being sold for 10 million shillings. So that's the reason why I feel there are many opportunities in the NSC, because they don't exist. That kind of information gap does not exist in many areas in the world. Where now I am talking to you publicly that there is a company here valued at 24 billion and is making 24 billion in 1 year. Let me simplify. I'm talking about a flat with annual rent ya mwaka ya 2.4 million na mtu anakuzia hiyo proti leo 2.4 million. I know it doesn't see, or am I seated? You are wondering maybe the other things. How can that be? The truth of the matter is that those are the kind of opportunities in the market. The bank that chairman owns will likely make 70 billion in net profit this year. But if you bought the entire company, it is less than 4 times the annual net earnings. For me, I don't think that is normal. I think it is totally abnormal. Because if you check the companies listed in the London Stock Exchange, New York Stock Exchange, there is no those kind of opportunity anywhere. I've checked. I've checked Nigerian stock market. I've checked JSC in the Johannesburg. I don't think there are companies more undervalued than in Kenya. Very, very lastly, we finished 3 times, so this is the very last. You have heard me talk about Safaricom. This is national but attached to what we are discussing today. You must have heard me talk about the government is underselling Safaricom. Why? Because they came in and told us, we are selling your shares as Kenyans for 34 shillings. Why? Because the market is around 30 shillings. So it's a good price. That's what they say. And I said, no, that's absurd. It's not possible for Safaricom to be valued at 1.5 trillion. They said, no, that's the market. And I'm trying to attach how the market is undervalued vis-a-vis the real value. Yesterday, we got news of a company called Nyoro selling 65% shares they have in EABL to a Japanese company. But yesterday, the shares of that company was 252 shillings. I want you to get this. The shares yesterday in a company that is already listed, just like Safaricom, was 252 shillings or thereabout. I hope I am right, but it's around that range. Or maybe that's the average I had done. If you take the money that the Japanese are paying for the 65, each share is valued at close to 600 shillings. So my take is, and that is what I'm pressing the government, you come and tell us about market price for the asset we own as Kenyans. And when there is a private transaction like that one, the investor is not looking at market price. They are looking at the real value of the company. That's why instead of paying 252 shillings, they are paying more than double that. Actually 135% higher. That shows that the market is at a value, number one, but also number two, that Kenya is making a gross mistake of selling Safaricom on the basis, only one basis, something called market price. Because there is no way companies are valued just because of how they are trading in the market. Market is there to give liquidity, but not necessarily the full value. And I gave the other example as I wind up. There is a company called Pingo, those who could remember, in 2014. It was selling in the market for 27.5 shillings. And some people came to buy it. Actually, some of the sons of the founder. I had some few shares, so I'm not giving stories. We ended up pocketing 85 shillings for a share that was trading in the market at 27.5. And that is why I am saying, as a public servant, that Kenya must do